Welcome everyone to the Limit Up Weekly podcast. My name is Don Collins. I'm a chartered accountant and business advisor of 30 years, a partner at Findex, a leading financial advisory accounting service firm based in Australia and New Zealand. I'm with Ian Reynolds, former bank foreign exchange metal market maker, early investor in Bitcoin and tech founder. Making money in stressed capital market situations is tough. A typical investment portfolio will often fail. The world is moving in really challenging times as the US tries to address US 38 trillion in debt, contradictory fiscal and monetary policy, internal conflict, and numerous wars. And the rest of the world starts to consider a new global reserve currency, a multipolar world, and aging demographics. So how can we understand what's going on in geopolitics and macroeconomics? Luckily, Ian is here with Siberia Capital's latest press release. Ian, thanks for coming along today.
Yeah, hi Don, thanks for having me.
So Ian, the latest release, Bitcoin bashed as capital starts to rotate. The black swans are here. That sounds very much like a problem on the horizon, or it is here now. This is obviously a follow-up of what's happening with gold and silver decline or crashing in the last week or two. So over to you, Ian, to talk through and explain this to us more.
Sure. Yeah, so the black swans are definitely here for Bitcoin, or have been for a few days now, as it saw a 15% down day, which is nothing like the 40% down day on silver, but it just shows that non-sovereign assets are really getting volatile. And these are the things that Bitcoin excluded, gold and silver normally sits on in the background doing nothing.
Yep.
Yet is now the most volatile asset out there if we just look at the recent history.
Yep.
So lots of things going on, and particularly with Bitcoin, the black swans are, and I have to read them because there's so many. Firstly, we're in the bear stage of a 4-year cycle, so that's not good for price. The Epstein files have suggested that Epstein, at least funded some of the Bitcoin development. Who knows whether that's true or not, but, mud sticks.
Yep, absolutely. Does that raise concern? Does that raise concern with people in that respect?
Yeah, it does, because with other rumours that the NSA, which is a US crypto government unit, i.e. they do lots of intelligence work around cryptography. There's one in the UK as well, and Putin has been alleged to be Satoshi Nakamoto. Who knows? Is it what the Bitcoin believers want it to be? It doesn't seem to be at the moment, and I kind of class myself as one of those people. There's so many things happening with it, and yet it's failed to respond to risk assets going up in the recent history. So stock market going to nearly all-time high. Bitcoin hasn't moved. Gold and silver surging, hasn't responded. So what is it? And now it could have been created by someone where we don't really want to be associated with. Sure. Can the cryptography get cracked by quantum computing, which is the next wave after AI? Who knows? But it kind of, everything has added up to a big shank down in prices, which I'll show you when we go to the charts.
Yep.
So I say in the update that, really the big issue with Bitcoin is that the US and Trump are trying to adopt it, which the Bitcoiners hate, of course, even though they wanted adoption. It's the wrong adoption.
Be careful what you wish for, hey?
Exactly right. Exactly right. And, it's the Trojan horse for Trump in that he'll take down whatever it takes to take down for him to remain president, or whatever his individual goal is. Call it the United States economy still existing, or the dollar as a reserve asset still existing. So all of these things added up to a really bad week for Bitcoin.
Yep. Sure.
overnight, the new Japanese Prime Minister was re-elected. She did a snap election. So that is Sene Takichi. So she had an absolute landslide, which meant that the Nikkei 225 went up a lot this morning,
Cool.
and has added to a raft of governments that really don't seem to be in control of their fiscal and monetary policy, along with America, where the administration is butting heads with the Fed, old story. In Australia, where that cross current has probably caused the RBA to cut when it shouldn't have been cutting, now it has to hike.
Yep.
The Japanese Prime Minister is a big one, so she says, for tax cuts, which is exactly what the Bank of Japan and the Finance Ministry don't want for the sake of their currency, which they've been trying to defend.
Now, you've raised before about Japan's financial problems. Is this going to exacerbate that? Is it going to make it better? You seem to sort of indicate there that there's butting of heads. So doesn't bode well for Japan, does it?
No, I don't think it does. I mean, it's not the be and end all, because Japan has 260% debt to GDP. So it's in the situation it has created for itself. Does this accelerate it going down? Probably. But at least I think the markets initially will be quite favourable, because we've had so many more Japanese prime ministers than English prime ministers recently. Like another old man turns up, and at least it's a lady with a different view, and she's now got in for a full term. So at least there is some clarity around that.
Sure. Okay. And what else is in the release?
Yeah, so otherwise we saw as I said, the RBA hiking last week. Bank of England and European Central Bank kept rates unchanged, even though the ECB has now inflation below target. So that's good. Stock markets, as we'll see in a minute, eventually didn't do too much, but there's plenty of people talking them down. In fact, the best performing stock market was probably the Dow Jones, so the old-fashioned one. And next week we've got non-farm payrolls, which was meant to be on Friday, but was delayed because of the government shutdown for a few days. And CPI on Friday. And obviously in the background we've got a strike on Iran. Whether Trump's going to do something in Cuba, who knows? So plenty of bigger black swans hanging around in the background.
Certainly not great times ahead. So let's have a look at your chart. So let's talk through that.
Yep. Give me a sec. So let's go through it and look at gold and silver to start with. So last week's massive volatility in gold and insane volatility in silver, a 40% day. We talked about that last week. But I think really this was a big move downwards a few months ago. And if you look at the size of the movements in the last year, it has gone absolutely ridiculously volatile. So apparently gold and silver dealers are awash with stuff they can't sell, because the public is bringing in coins and bits of jewelry and stuff like that that's no use to anyone. Yet central banks are still buying gold, and there's apparently a massive short position in the silver market in China, which the Chinese government had to not shut down but stop getting shorter of silver. And supposedly in the COMEX, which is the New York exchange, there's a lot more silver stood for delivery, i.e. people expecting delivery of the physical metal when their futures contracts expire, than the COMEX has to deliver. So, and that's meant to be happening at the beginning of March. So if that does happening, the exchange is insolvent. And these aren't, there's so many conspiracy theories out there at the moment, thanks to Epstein. But
and has that historically happened before?
No, never. And the LBMA, as you know, we were talking about last year, they probably still have delivery of physical metal going back months now, i.e., customers have to wait for months for it.
Yep.
So the whole paper, gold and paper, silver charade is coming to an end, because you can't have a quadrillion's worth of derivatives with only a very small finite amount of physical metal to settle it with.
Yes.
If you're doing it with fiat currency, at least you can print a whole load more. Not that that's a good thing.
Yep.
So unprecedented volatility, which now followed Bitcoin around. And so although the volatility wasn't as great, it was in one direction only pretty much. And there's talk of exchanges having gone bust and all sorts of things as usual. And the usual culprits are coming up every 4 years. They've got their own 4-year cycle to say it's going to zero. It may do, I don't know. But certainly this is the buy zone. If it gets down to 50,000, there'll be a lot of speculators wanting to buy there. Yep. I mean, it might get down to 35 or something. But we're getting to a point where it will probably bounce along the bottom for a bit. So you can work out, you have plenty of chances to buy near the bottom, if not at the bottom, before it goes up again. But of course, quantum computing, sudden update, we've cracked the Bitcoin algorithm, the cryptography goes to zero. But then again, so does every exchange bank in the world. We can't hang around waiting for the end of the world because we've got to make some money first.
Exactly right.
In currencies, this, believe it or not, is a pegged currency. This is the Chinese yuan, which you've seen a massive appreciation of, because this is dollar yuan, since April last year. So this really shows the dollar being weaker over that time period, because the People's Bank of China intervene every day to support this, either buying or selling it to keep it in with the peg. And the peg is probably not broken, but it's something that they don't want to be buying dollars because they produce quite enough dollars already. So they want a weaker yuan, but obviously the US administration doesn't.
No,
so
of course.
Dollar yen, obviously the re-election has spurred more speculation on its value. So this is the intervention level the other day, last week, as you saw it collapse, and it's coming back up again as interventions where they didn't actually intervene, they were just talking about it, or the New York Fed was checking rates on their behalf. But it's going to go back and challenge them again because they haven't answered the questions. You either got to intervene and do it properly, or not. Just talking about it just buys you a week. The bond markets have been pretty quiet. US Treasury yield hasn't done that much, but is going in the wrong direction for Trump currently. So the administration is already providing lots of support for US bonds. With 38 trillion in debt, they've got to. And at some stage, it will probably move to capital controls and yield control, where the Fed buys bonds at a certain yield to keep rates down. Which is the only way that they can really address all of that debt.
Agreed.
And that's a soft default. Been done many times before. Stock markets here. This is the Japanese stock market. I don't think that 62,000 was real. It more came up to here, 57 or something. But anyway, as it's been on an amazing run for a place that, this is 30,000 back in April. So in a year, it's nearly doubled. Stock market in Japan.
And April was when the current Prime Minister was elected?
No, that's much more recently up here. But this long run here is really when its bond market started falling out of bed, and the Bank of Japan was slyly raising rates. The market did it for them. So they've got a place where their yields are going up and their currency is going down, which is a very bad place to be in. If we look at the US stock markets, they can't go down. They look like they're going to down, but they never seem to go down. So you've got this big topping pattern here, but every time we go down, we get rescued. So that was the NASDAQ. The S&P looks pretty similar, but the hero of the day, for once, is the Dow Jones, which has made an all-time high, and you can see powering ahead on Friday.
These three charts, and you sort of touched on earlier about equities having their run, or is it really about, as I said, everyone getting out of the Bitcoins and the silvers, etc., and this is their place where they'll make their money?
Yeah, that's right. So I think you can probably say that the money is rotating into more defensive stocks, like in the Dow Jones. It's not rotating particularly into the S&P or the NASDAQ, which is riskier. And with all that circular accounting going on with all those AI stocks. But it is going...
You've got a bucket or a parcel of shares in those indices that are based around AI and computing, etc. So that's not going to be a place where you want to be as a index.
Well, I think that, this is Google, for example. So you can be in the AI space, or you can be in a cloud computing AI space, which is safer. So whereas Google has many ways that it can make money, Nvidia, for example, here we are, probably doesn't. It's a pure AI play, and you can see that the biggest stock on the NASDAQ, it's not actually doing anything. It's very volatile, but it's not doing anything.
So marking top.
Yeah, well, it is doing exactly right. You're right. So yes, there's a rotation into more defensive things, I think, at the moment.
Anything else out of your release you wanted to talk through?
Lots of stuff about Prime Minister Starmer, who seems to have tripped up on himself again. Bloomberg article today suggesting that he hasn't got much time left and the other members of the cabinet are going to tell him to leave, or they're going. And I think that will probably happen.
As mentioned earlier, for next week, we've got the US non-farm payroll and also the CPI on Friday. No other releases occurring this week.
Say again? Wednesday is non-farm payroll. And
the
Friday
CPI releasing Friday.
Yeah, that's right.
Excellent.
So CPI will be really important because everyone's focusing on inflation, but in reality, there is no inflation. Despite tariffs. There's actually a lot of deflation. So in China, in Russia, and in the US now. So Trueflation, which is a real-time metric, it's a platform that looks at prices in real time rather than CPI, which is months and months behind. It's telling us that yearly inflation is actually below 1% and has gone down really quickly. With the consumer sentiment going down in America. As that starts to play into the numbers, the market is going to start panicking about deflation rather than inflation. And which really plays into Trump's hand, getting rates down, apart from the fact that the economy is collapsing.
Okay. All right. Well, thanks again for your release and all of that news that we've just digested. Look forward to see what's going to play out in the next week. Thanks to everyone online to listen again, and thanks again, Ian, for your insights. Have a good week.
Thanks, Don. You too.
Thank you.